Hey, what's up, guys? This is Sam, and I'll be doing the free video for January 7th, 2022. So, first free video of 2022 by myself. Normally, I like to bring you guys kind of a big picture view on things, and I'm going to try to weave that in a little bit today. I'm going to try to give you a little bit of a big picture view, and then also give the people what they want, at least on YouTube, and that's stock picks. So let's dive in real quick. I want to show you a couple things, and I'm going to try to connect the dots really quickly. I don't want to take up a lot of your time on a Friday, but I'm going to try to connect a couple of things, and then kind of tell you the strategy that we can use, right? So let's actually start here with the QQQ. This is obviously the tech sector ETF. And it's one of the weaker parts of the market. The only weaker part at the moment is actually the IWM, which is small caps. So one thing I want to point out here is that the Qs did finally have a weekly close below the weekly 21. You can see back here it got close, but it never actually closed below the weekly 21. And then this time it actually did very nominally close below the weekly 21, and it did so in very big volume, right? So just a minor point there, right? Is this 21 shattered? Is it broken? Not really, right? You're still kind of holding these lows for now. You can see the same lows here, right? So you're still holding your floor, but your structure is starting to take on a lot of damage. Point number one. Point number two, you see that high right there, and then you see this high here. So what the indicator should look like is it should have two higher points. The indicator should look like price, right? So you see there's a high, there's a higher high. Price goes up. Here's the high on the indicator, and then here's the second high on the indicator. You see how the indicator's gone down, even though you've made a higher high? That's called a momentum divergence, and it can be a problem. It can start to definitely be a problem. So you can see here the indicator is kind of waffling around the red line there. It's not staying consistent. It's kind of above the red, below the red, above the red, below the red. And now you're starting to get a couple more sell signals that are kicking in. When the indicator looks like this and it's sloppy, the sell signals matter. When it's perfect, the sell signals are just mean reversion. So that's point number two. So remember that you have to hold this floor here on the Qs. Otherwise, things are going to get real sketchy. Now, I don't have any positive news to bring you here in terms of the momentum, because you can see the sell signals there. You're going to need something that looks like this to reverse that. And you're really frankly nowhere close to that. You can see the same sell signals over here, and you're going to need some green arrows to reverse that, and again, you have nothing. So tech is becoming extremely heavy, number one. And I wanted to start here because I know that most of us like to trade tech. It's been kind of the most fun part of the market now for about 18 months at least. It was actually the most fun part of the market even before that, but for at least 18 months it's been the leader. But it's starting to get hit. So why is it starting to get hit? Well, I'm going to segue you into a shameless plug because you're already on the internet. So, and you've already left a like on this video, so you might as well leave a follow for my Twitter. So I just started my Twitter not too long ago. I'm probably the last person on earth that's going to have a Twitter. I went this long without having a Twitter. I think Twitter's been around for what, like 10 years? I never expected to have one, but here we are. I have a Twitter. So it's Sam_Shames_. Give me a follow if you check it out. And the reason I want you to give me a follow is because every so often, even though I don't really love Twitter too much, I'll post something that might help you. Now, I don't post very often, so I'm not going to spam you. But you can see here what we posted to start the week. 2022 started off with a bang in rates, interest rates. We're seeing the internals with a positive divergence. The setups say to expect more. Why do we care? Because this changes what we trade. This is on Jan 3rd. Tech takes a back seat while inflation trades like banks, materials, energy, and semis become the focus. So remember that point. When interest rates are going up, you have to change, especially when they're going up this quickly. You have to change. You have to change what you're trading. Otherwise, you might get run over. So if we go back over here, this is the direct 10-year interest rate. This is the TNX. So right now with a reading of 1.771, the 10-year interest rate is basically at 1.771%. And you can see that it's starting to break out, right? You see how over here on the left, you have this previous high, and then you have the weekly 200, and it's attacking that level strongly. So there's a lot of resistance here, right around 18 or so, and it's coming in super hot. Look how good that looks. And you have a squeeze, and you held the weekly 50, and so now what do you have? Well, you have a legitimate breakout pattern. So this is what's freaking out the market, right? When interest rates spike higher, especially when they do it like this, tech tends to freak out a little bit. If interest rates start making new highs above these levels here, and we could argue that they already have, then tech's going to freak out a little bit more. So it changes what you trade, because if you were trading something like Google or Amazon or Tesla this week, you didn't have a good week. If you were trading something like Chevron or banks, you had a pretty good week, right? So the market's not falling apart, but it is heavily not favoring certain parts of the market. So that's whatever point number that is, that's the point. So for the folks that are saying, we don't care about the big picture, give me a pick. I got you, dog. Here's how it works. So when you have an higher interest rate environment, the thing that benefits the most is going to be banks, right? Maybe one of these days I'll cover it in a free video, but just take my word on this. When interest rates rise quickly, the banks love it. So focus on banks, number one. The second most positively correlated thing to rising interest rates is energy. The third best correlation to rising rates is industrials. And the fourth is materials. On the other side of the coin, things that do not like what's going on right now, higher rates, things that will not play well. Number one, consumer discretionary. Number two, technology. Number three, typically utilities, but definitely consumer and tech. So just remember that, jot it down. So a couple of picks here that I think are very solid. Now, of course, be reasonable. Wait for these to pull in a little bit. They've had a heck of a week, a heck of a move, but these are some of the best setups that I see. And the first one is Chevron, CVX. Now, you can look at all the energy names. It doesn't really matter. They all are in various stages of this pattern. So if you have another name that you like, I like Devon, DVN, but I think Chevron's just the easiest play. So very nice breakout here. Should actually continue much higher than this. And guess what? It actually likes what's going on with the rates, whereas something like Amazon's like freaking out and doesn't like it. So pick one. All of energy, essentially. I'm just using Chevron as a shortcut. Something that is not actually ridiculous here in terms of being extended is JPM. So what did we say was the number one thing that likes higher rates? It's banks. So here you can see the squeeze. The trend oscillator is good enough. Green came back down to the red, bounced, giving you a little separation there. Good enough, and it likes what's going on here with the interest rates. So I'm going to show you JPM, but frankly, I think any of the banks will do. The ones that actually like it the most, if you want to get really granular with this, the banks that will do the best are actually the regionals. So KRE, right? And then lastly, industrials. So if we look at something like XLI, the industrials should continue to like this environment as well. So just a couple of ideas there in terms of what to trade, and then frankly what not to trade. And just be also very cautious, because if we go back to where we started, which is the QQQ, there's a lot of problems here. And unfortunately for the market, the QQQ in technology is so big that if it starts to flush, it weighs on even the things that would normally be good. So you have to watch this level here on the Qs. It's basically just the previous lows. Understand that those previous lows right here overlap with the weekly 21, which is your reliable source of support on the entire way up. So if this starts to give, because you have a negative divergence, a sell signal, triggering short, if you break the floor, there's going to be problems. So keep an open mind that all of this may just turn into a short, right? So tech will need to bounce next week on Monday pretty hard. and it's going to have to keep pushing in order to kind of stabilize things. In the event that tech is stable and the markets are stable, then I think you want to continue to focus on banks, energy, industrials, and materials until something changes. But at least for now, that's the play. So real quick, since I have you beautiful people here for at least another 30 seconds before you get bored and go to a dog video on YouTube, we are doing a webinar for the indicators. So you guys have had a chance to see how the indicators work briefly, right? It's only a free video, but you've had a chance to see how the indicators work. These are the momentum indicators that I use at the bottom part of the chart. These are some of the most interesting and frankly unique and high probability, best reliability momentum indicators I think that are available out there. Don't take my word for it in a 30-second soundbite here. Go check out this this webinar that we did, and we're going to show you how it all works. So if you're curious in terms of understanding markets a little bit better, maybe you bought something and it was like, man, that looked really good, and then it just fell out of bed. Why'd that happen? Usually it's a momentum issue, right? When things look good from a structural point of view, but then they fall apart, usually it's a momentum issue that was hiding under the surface, and that can be found using these indicators. So if you're interested in that, go check it out. It's at this link right here, simplertrading.com/grow replay. And if you have any questions about it, send me an email. I'm at sam@simplertrading.com. And I hope to see a few of you YouTube folks in the class. The class will be on the 15th. So if you get a chance, check out the webinar. If you like what you see, sign up for the class. Send me an email, let me know, and we'll have some fun, and we'll give out the indicators, and I'll show you how to use them in the class. All right, guys. Well, that is my time. Thanks, as always, for checking out our videos on a Friday. Always appreciate it. Thanks for stopping by. Before you go somewhere else on the YouTube, make sure to leave us a like on this video, and also subscribe to our page. It really does help us with the algorithm, helps us get the message out, and it's free to you. So nice little way of saying that you stopped by is to just leave us a like. So I appreciate you guys. Have a great weekend, and I'll see you for the next video. Cheers. Hey guys, this is Sam, and I'm the Director of Equities at Simpler Trading. I want to thank you for watching this video, and before you go somewhere else on the YouTube, I'd like to ask that you comment and like the video. It really does help us out with the algorithm and getting the message out to more folks who like to see our content. Also, be sure to click the bell notification and subscribe to our channel so that you never miss anything that comes out. If you want to watch us trade in real time using our own money, come over to simplertrading.com and learn how to sign up. I hope you have a great rest of your day, and we'll see you for the next video. Cheers.